Good morning, everybody. It is the 19th of December, Monday. I'm currently in Europe, and so it is my afternoon, but we're coming on 8 a.m. New York time. And just quickly starting with the news, I wanted to just go across what we're looking at this week. Last week was huge for news. This week we have a relatively slow news week. Okay, so nothing today. Nothing tomorrow. It's high impact. Wednesday, we've got consumer confidence at 10 a.m. Thursday, we only have low or medium impact news coming out. And Friday, we have the core PC price index. And then we have Christmas. So a slow week this week. And that being said, anything can happen, but there are no catalyst times that we need to look at. But we still could get strong trending moves, okay? But just be aware of that. When we don't have we don't have defined catalyst times for news, it can be a little bit more dangerous for us because we can't actually predict when the big moves are going to happen. So be very wary of our index opens this week, 9:30 a.m. New York time. Beware of that time. Beware of the London open, okay? Beware of 8 a.m. in London. These are key moments when liquidity comes in the market and when we'll get a certain defined push in a direction. That being said, now we have the Dow Jones Industrial Index we're looking at, US30 on the daily. Okay, we see that for us here, we had this pin bar to the top, okay, what I call a kangaroo tail, which is this candle here where we have a small body and a steep needle top, okay? And for those who haven't seen it before, you tend to see them at the bottom or top of a major turnaround. You can see there's one down the bottom of here, another one down here, okay? Another one here, okay? And you know, they're indicative of basically showing a change in pressure and direction, especially on a daily candle. What it means is that there was buying pressure at the beginning and then resultant selling pressure at the end of the day, which resulted in a high. This is what the end of the needle is. It's a high for the day. And the close, which is somewhere down here, it did close higher than it opened, and that's why it's a white candle. But it closed pretty much where it opened, okay? And that means that there was a very neutral, very balanced power at play during the day, which was the same amount of selling, buying and selling, okay, and that is indicative of a change of momentum, a change in direction. We don't see that candle anywhere except for the kick to the upside here at the bottom on the 13th of October. So for us, for what I'm looking at right now, is like nearly a 2-month run to the upside, a 2-month bullish trend that has broken structure here. And we are now running out of steam, and has actually changed direction for me anyway on the daily. So really significant where we're at the moment. We're sitting at 33,000 demand, and if we go to the 4-hour time frame, getting a closer look at this, we can see how cleanly this break of structure has taken place and how strong the move is. Because I've been talking about this for the past 2 months, waiting to see a resumption of this downside bearish trend that we've had for the past year. And we can see now we have the strong trajectory to the upside, a waning of power here to the upside, okay? So an initial kick out, a waning of power, a ranging motion, a kick into 37, nearly 35, yeah, pretty much 35,000 demand, a supply up here, our high at 35,000. And then a very strong rejection, which gave us that daily candle we were looking at just before, where with the pin bar, the kangaroo tail. That's what this looks like on the 4-hour. We had a strong rejection, and then a waterfall cascade to the downside, breaking all forms of structure that we could have in this uptrend. Okay, the key defined break of structure for me is this drop through demand here at 33,500. Okay, 33,500 demand, which is depicted by this blue line. Once it breaks down through that, closes below, for me, it's a very strong indication of a change in structure. Now, look, anything can happen, but right now, for me, momentum is to the downside, okay? And we are sitting at demand 32,500 here. Major demand 32,500 is where the day kicked off with our CPI release, inflation report back in Thursday, the 10th of November. And so we're working these levels to the downside now. And quite evidently, the next one to the downside is, if I just clone this here and drag it, is around here, 0.1 at that area, 31 or 32,000. Okay, is the next area I'm looking at. And what am I looking for right now? I'm looking to see this sort of continue at least falling down to 32,000. That's my predicted movement on the 4 hour. Going down to the 1 hour, if we just reload here, 1 hour, look, I don't want anyone to get confused by this, but if we could see, this is the kind of channel we've got going at the moment, okay? And for me, it is a strong channel. Now, how beautiful if this keeps running for the next 2 months to the downside. Some beautiful shorting opportunities we'll have. Just waiting for it to pull back to these, 1 hour areas, 33,500. It gets back up here and just taking shorts there on the 1 minute river. Okay, so these are now becoming supply zones. Okay, and we're starting to move back down this hill. I definitely do not think we're out of the woods here in regards to recessionary behavior of the US stock market or all world stock markets in general. We know that we're in a recession, and so for this just to continue kicking back to the upside here, up to 3,800 and pushing to the upside, for me is not a bit of a pipe dream at the moment. I do feel like I'm going to see a continued push to the downside here, at least down to 2,600. Okay, this is kind of the area that I expect price to come back down to before we get a kick back to the upside. But we are in a recessionary contraction at the moment to the downside. Okay, so that's back to our 1 hour. What am I looking at now? 1 hour, I'm looking at for the price to push back up to 33,500, and then continue this fall down to 3,200. All the demand zones that are down the bottom here. This kind of action is in play, and what that means for us in regards to changing things, changing the way we trade, is just again be wary of selling now. Before be wary of buying. Before we were being wary of selling it, we were still selling the tops and peaks. We know that any trouble we got into was to do with any sells that were stuck on. Okay, but we are still selling quite a lot in that uptrend. It's a dangerous thing to do. And especially with selling happens quite quickly. Sell-offs happen much more quicker than buying. So just be very careful with your buyers, okay? Just look for sells, look for selling opportunities here. Remember that our general pattern on the 1 hour is this pullback, goes down, comes back up, goes down, comes back up, goes down, comes back up. And we're just looking for these sweet spots on the 1 minute in these peak points, okay? Like when the wave comes back up, right? For example, comes down, pulls back up to the top of the river, sell there, comes down, right, pulls back up to the top of the river, sell there, comes down, pulls back up to the top of the river, sell there. Okay, right now, what am I looking at? We're sitting at major supply here. Okay, major supply coming to the US, to the New York Open soon. It's an hour and a half away. Where are the areas that I'm looking at? Okay, where are sure bets for me in terms of selling? Well, we have supply here, major supply through 3,300, this area here. Sorry, 33,000. Major supply through that area. Does it line up with the top of a river? Kinda. Okay, kinda does. Where's the next area here? This kind of batch area through here at 33,150. Okay, 33,150. That lines up with the top of our river. I'm just looking for this kind of action today. Okay, simple. Keep it simple. Selling, short position, boom. You can give yourself a little bit more room on the take profit on a short when we're in such a strong downtrend. Make sure your stop loss is out of the way. You can even bring it down to 20 lot because there's a lot of volatility at the moment. So, 20 lot or 10 lot on the 100K account, 20 lot on the 200K account, 25 if you're feeling, if you're with the screen, you know what you're doing. Drag your take profit out a little bit. Let it come up here, sweep in and rip to the downside. Am I buying this area at the moment? No. Okay. I don't want to mess with that. If it pushes straight to the downside, okay, and then pulls back, you can look to maybe short. I want to get into this more in depth early in the year, and especially when people come on fresh and new. I don't want them to look at anything other than the riverbanks. But if you've got a strong push to the downside, you can still wait for that riverbank. Like it's going to come down and pull back through the riverbank a couple of times. Okay, so if you get this kind of action where it pushes really hard, just leave it alone. Leave it alone. Okay, it's the same as an uptrend. We don't want to be just dealing with that, even though it puts us off track. It puts us out of sync with the market. You're always going to get a good sell back at the riverbank if you wait. Okay, so we're going to get a kick up to the upside like this at the open, and then a nice sell to the downside, or it's going to grind down like this from the get-go. The river's going to come across, and then it'll eventually kick back up into the riverbank. Okay, use discretion. Work with the supply and demand zones. Where's our immediate level of demand? Okay, it's down here. That's the area I'm looking at for major demand. This area here. Okay, but I'm looking for this kind of action today. Up to the upside, sell, open up your take profit a little bit, let it work. Okay, bag yourself like 1, 2K, 3K trade here. Work this downtrend nicely. Okay, beware of your buying. Okay, if you buy and it runs away from you, it just requires a bit more skill and nimbleness. If you're on the screens, you're relaxed, you know what you're doing, you're calm. You could take a buy off this demand zone, a very small one. If it does, just work towards that immediately without giving you this nice sell here. Okay, so if it cranks out straight to the downside, doesn't give you the sell, and you want to work this demand zone a little bit, remember you've only got 1 or 2 hits, and assets really be clear on how strong that momentum push is. If it's a very strong push to the downside like this, I wouldn't be buying that area. If it's a soft push to the downside, something like this, then you can look at buying it. But it depends on the trajectory, how strong the push is. Use your eyes, like this kind of push here, you can buy this kind of action, okay? But if it's grinding to the downside, it's pushing very strongly to the downside, you see riverbank is contorted and it's got a very, very strong slope to the downside, okay? All that means that you're trying to, swim up a river that's pushing against you. So just be mindful of the trajectory. The angle, okay, just to be clear, angle of attack here is very deep on this one, as opposed to here, the angle of attack is not that deep, okay? Look at the difference in the trajectory. If it's a softer angle of attack, you can get in with a buy, but be prepared for the buy not to work against you. I normally would try and catch the order beneath, so I'd look for the next demand zone in front. So for example, if it was coming down here, I would look to catch it here and take that little lick back up, and vice versa, being ahead of price, catching it as it pushes into its its new demand floor. So that's this morning. That's Monday. I'm going to place set and forget trades. I'm leaving the house. I'm going out. I'm not paying attention to the screens in any capacity in terms of live trading or manual trading away at the moment. I'm just setting and forgetting, just keeping in flow with the market. My priority is not trading for the next 2 weeks until I get back to the screens. Just so everybody who's listening, I am technically on holiday until the start of the new year, and then I'm going to be going hammer and tong for 3 months. And I'm putting a lot of energy into this. I'm really excited to get a handful of you guys who are ready to get through and get your accounts. We've all spoken privately about what we're doing in January, and I'm really excited to get you guys across the line. Those who've started with me or are kicking off, rest assured we'll be getting real hot and heavy with it, and you're going to be having a great time come January, February, March. So enjoy your holiday until then. I know some of you have time off now. You've been messaging me saying, is the course material ready yet? It's not. 9 chapters are available on Thinkific now. Send me a DM if you need log into that. Other than that, all that material will be polished off early January, and I really look forward to having a very strong 2023. Remember, this is a process. This is a skill. It takes time. If you're diligent, you show up every single day, you pay attention, and you rinse and repeat the same thing, and you get control of your psyche, and you make it habitual to manage, basically, being okay with uncertainty. You're going to have a very nice secondary cash flow for yourself in the coming months. So with that, have a beautiful Christmas. I will be doing analysis every single day just to keep us in flow with everything. We're currently looking at a bearish structure. It's new for it's not new. It's a welcome return from what we've been trading all year. And yeah, just have a great day, and any questions, reach out. But I will be active in the office come January 3rd. Okay, thanks very much. Cheers.